Buyers are really looking for opportunity. And I think one of the real takeaways from what we're seeing in the dynamics of the market is that the opportunity comes with the ability to have the supply chain availability, the opportunity to be able to have that production on time, and the capacity to meet record demands.
Welcome to a brand new episode of the M&A Mastermind Podcast presented by Cornerstone International Alliance. I'm your host, Nick Olsen. On this show, I get the opportunity to talk with the brightest minds in lower middle market M&A. Together, we discuss industry intelligence, deal management, shared successes, specialized expertise, and much more. If you serve the small to medium-sized business owner, this show will offer you tactics and insights you can use and implement now to become a master in M&A. Hello, everybody. Welcome to a brand new episode of the M&A Mastermind Podcast. We're talking about a very interesting topic here today, the aerospace and defense industry and what it's doing right now and how it affects the M&A space. Our guest is the Managing Director for Aerospace and Defense and Government Services for Brown Gibbons Lang. Please welcome my guest today, Meghan Welch. Meghan, how you doing?
Good. How are you, Nick?
I am doing fantastic. Really excited about our conversation here today. We have not, I don't think on this podcast have talked about specifically this industry. So I know our listeners and our audience will find a lot of value in our discussion here today. But to kind of set the stage, tell us a little bit about yourself, your background, and what got you into this great industry.
Yeah, so, no better time to talk A&D than when our president is tweeting at 2 a.m. about defense contract margins. But so I'm a managing director in our aerospace and defense practice. We provide here at BGL, M&A advisory services, as well as debt capital market services focused on the middle market. So we work with founders and private equity firms, predominantly on the sell side, sometimes on the buy side, but really focused around that intersection of the industry specialization and M&A execution. So my background, I'm a military brat, born and raised on military bases around the world, married to a former F-16 pilot, twin brothers F-18 test pilot. Not why I got into the industry, but super convenient when I work with businesses that have aviation components and a good talking point for a lot of the founders. BGL focuses in on the middle market, as I mentioned. Our average transaction size is around 300 to 400 million enterprise value, but we will work above and below that up to, $1.5 billion, $2 billion on our top end.
What are you guys seeing, before we dive into the actual details of the industry, as for opportunities, maybe below that, maybe that 50 to 200 million range? Are there a lot of opportunities in the, in the aerospace and defense spaces?
Yeah, absolutely. And we'll work with those businesses as well. Our model is really client-centric. So we want to provide the best advice to our clients as possible. And we pride ourselves on M&A execution excellence. So we're not looking to take on 100 deals or 50 deals per banker, but we do work on smaller transactions as well. And within A&D and the supply chain, there are a ton of businesses that fall within that range. So we work with them quite often. And I have a number of deals that I've worked with, including carve-outs from large primes and strategics that fall within that range. It's a great sector to be in. There's a ton of fragmentation in each of the subsectors, and it's one of the big drivers of industrial growth right now.
What are your typical, buyer types in this? Like, who are looking for companies in this space?
It's interesting. I've been doing this for almost 20 years, and defense used to be the redheaded stepchild of the industrials practice during sequestration. Folks didn't really want to touch defense. But fast forward to COVID, it was designated one of the most resilient industries and has been booming ever since, no pun intended. So we've seen a variety of investors in the space, not only the traditional aerospace and defense investors that have been interested and owned assets for decades, but we're seeing new private equity and financial sponsors coming in that are interested just given the tailwinds. We're seeing large diversified industrial strategics that want to get access to A&D. So the likes of the Molexes, the TE Connectivity, et cetera. These large strategics that have mandates for multi-billion dollars to grow defense exposure. And then actually non-traditional investors like high net worth family offices that have enthusiasts or aviation enthusiasts or defense enthusiasts, as well as folks like Indian tribes. Strangely enough, I've sold a few businesses to them, and they're flush with cash from casinos. They love defense businesses. They can also bid on contracts with the Defense Department as disadvantaged contracts, as a Native American, for example. And so they are paying strategic multiples and very active in processes as well. So it's a really broad spectrum of investors that we're seeing getting into the space. And on the aerospace side, similarly, across business aviation, commercial, and military, we're seeing a ton of different interest.
What is the state of M&A in the space right now? As you kind of hit on a little bit, but maybe dive a little bit deeper into what what the aerospace and defense industry looks like right now in the M&A space?
Yeah, it's a great industry to be focused in on. I believe that both aerospace and defense are in the early innings of a cycle boom. Aerospace, I'll start on that side. Predominantly commercial aero was really impacted by COVID. COVID was a black swan event. A lot of airlines parked aircraft. It had a ripple effect through the supply chain at a time that couldn't have come worse, with Boeing having a number of quality issues, starting with the MAX program in 2019 and the FAA limiting how many planes they could produce. It's created a dynamic where there's a record backlog in the supply chain for commercial aerospace, as well as record demand for maintenance, repair, overhaul, basically repairing those aircraft that are staying in the fleet. Airlines are flying aircraft much longer than they expected. A lot of these aircraft were expected to be retired by now because Boeing was limited in production and how much they could produce. There is this 13 plus year backlog. It's a record backlog. And so airlines have to fly older assets longer, which is slightly terrifying. And you're seeing the ripple effect and the repercussions in the market. And you are seeing it. I'm sure you've flown on a Delta or an American or United plane, and you've seen the very special maintenance aviation duct tape holding together panels. These are just aircraft that are being extended on their useful lives. But what that means is it creates huge opportunity in the supply chain. It was really struggling there for a moment post-COVID. We're starting to see a huge resurgence, especially as Boeing's production picks up. And we're starting to see a lot of the kinks getting worked out. Business aviation had a resurgence during COVID as well. That was an industry during the financial crisis of 2008, had kind of a bad connotation associated with it. Fast forward to COVID, there was a real premium to be able to fly private, especially with folks like NetJets and Wheels Up doing fractional ownership. You could pay for a family of 4 to fly comfortably in a business jet, and it would be very comparable to a first class ticket for a family of 4. And so business aviation has been on the rebound as well. So across all of business aviation and charter, that's been picking up. And then military across the board, no pun intended, but again, military has been booming since COVID. It was one of the protected, resilient industries coming out of COVID by President Trump, has continued to be so just with the geopolitical environment. So all facets of defense are firing on all cylinders. And you see it almost every day in the news with Trump bringing up our need to increase production and to be able to shore up our supply chains.
Across the board, what does deal activity look like right now? From a seller's perspective, are there a lot of opportunities? You're seeing a lot of increased, activity in this space?
Yeah, so A&D has been one of the sectors that has been resilient from an M&A perspective. Every sector has been impacted by the downturn in M&A from a total transaction volume perspective, but A&D has been less impacted than other areas, other industry sectors. We're seeing more and more pickup. What's been interesting within A&D has been high quality assets have been going preemptively through a process. So maybe even getting to the IOI stage, maybe not even running a process and having a strategic come in and preempt those deals. A lot of private deals being done behind the scenes. A lot of go private opportunities have been happening with some of the large mega funds looking to the public markets to be able to find value and taking some large public companies private. Advent's been notorious with that, with Cobham and Ultra, and a lot of other folks have been really successful on that side as well. And then tons of divestitures. A&D has had huge consolidation and mega mergers that have happened. And so you've seen divestitures come out from that. And the likes of the large conglomerates like Raytheon, which Trump was picking on a few days ago, RTX Corporation owns United Technologies. They own Pratt & Whitney. They own a number of different really well-known A&D brands and continue to see opportunities for divestitures come out of those.
You talked about the supply chain, and what about components, not just the actual, whether it's manufacturing or, components, or what does that kind of look like as it relates to the space?
Yeah, so within the space and precision manufacturing and component manufacturing is becoming the single point of failure across the board for the subsectors. And it's created a really great dynamic, especially for subsectors that are really founder-owned heavy, lots of fragmentation, smaller businesses, say sub 10 of EBITDA, that have access to programs or opportunities for platforms or domains like maritime that have huge demand fundamentals. So we're seeing that be opportunities for investors to come in and roll up and do a roll-up strategy, or for strategics to frankly shore up their own supply chain, to ensure that they have continuity, to ensure that they have the production themselves. So for example, Ensign Bickford, which is a large privately held aerospace and defense company, multi-billion-dollar revenue, did an acquisition a little over 2 years ago now in that precision manufacturing space to be able to shore up their supply chain. Whereas historically, that sector has been not as much of a focus for the strategics and the financial sponsors. And we're seeing that roll forward on the component side.
Switching over to the buyer's perspective, what are they prioritizing in the space in 2026?
Yeah, so it depends. Buyers are really looking for opportunity. And I think one of the real takeaways from what we're seeing in the dynamics in the market is that the opportunity comes with the ability to have the supply chain availability, the opportunity to be able to have that production on time and the capacity to meet record demands. Strategic buyers are really looking for access to key programs and domains and really trying to hone in on what they think are defense funding priorities that really fit what their strategy is going forward. No longer are folks looking to do roll-ups or just acquisitions for acquisition's sake to get scale or breadth. They're really trying to be purposeful and strategic with what they do. And so you're seeing that with the likes of, L3Harris has been divesting a few assets. They recently announced the AE Industrial investing in the Rocketdyne, which the Pentagon has also announced investment in to be able to shore up the rocket propulsion market, which is a market that has really been constrained from a supply chain perspective and is a huge national security concern. So we're seeing across the board just that focus on defense funding, that focus on very specific areas that are core to the strategy of the strategics, or areas that financial investors are able to create a roll-up strategy that helps alleviate some of these supply chain bottlenecks.
What about just differentiated technology like that? I would imagine there's a lot of demand for those new technologies and ways to create specialized manufacturing abilities.
Yep. Yeah. So technology plays a big role in defense, and we're seeing a lot of VC money going into defense as well. As an aside, outside of just a lot of venture capital money and startups have been in the defense space because there's a huge focus on developing new tech. I'd say for technology itself, if you are a founder or if you have a certain technology, it's getting through what we call the valley of death with the DoD. It's getting past prototyping, it's getting into low rate production, proving that you can do full rate production from a manufacturing perspective and winning actual programs with longevity and longer term horizons on them. One of the things to be careful with from an investor perspective on the tech side is that the DoD has been using a lot of different, and NATO has been using a lot of different investment vehicles to try and spur new technologies. And in doing so, you get a lot of R&D contracts that are 1 year, 2 year in duration, and a lot of different opportunities and ideas, but these don't have traction long term. It's when we have something called a program of record or some kind of contract that's 5 years plus that gives certainty of funding and really cements that technology as the next gen technologies where you're seeing a real opportunity there.
How much do those contracts impact the value of these businesses? I would imagine pretty significantly. That's probably something buyers are looking for.
Yeah, so programs of record are huge from a valuation perspective. They provide certainty of funding. They provide certainty of the program for multiple years, often 5 to 10 years. So those are huge valuation drivers for programs. But even having technology that is on the cusp of breaking through into a different sector, even having that technology and having those conversations and winning what we call small business contracts or those low rate production contracts are also valuable. From a cautionary perspective, we're seeing folks trying to sell their company and getting full forward credit or wanting full forward credit for their technology before they get kind of those programs of record or longer duration contracts. And that tends to be a big turnoff for strategics or financial sponsors, gets tied up in diligence, or ends up being a huge earnout component of their transaction.
This episode of the M&A Mastermind Podcast is powered by Cornerstone International Alliance, where leading M&A firms come together. As part of this international network, you get access to global opportunities, over 200 M&A experts, enhanced collaboration and knowledge sharing, and some of the best M&A tools and resources available, all to help you take your firm to the next level. Ready to join this exclusive network? Visit cornerstoneia.com/new member today. Mention kind of a little bit of structure there. What is a typical time frame of a A&D transaction? Is it your typical, could be 6, 9, 12 months? Is it longer, shorter? Like what does a deal look like?
So it depends. A lot of these preemptive deals can be quicker. It depends on regulatory filing requirements. If you have to file for HSR, A lot of times there's novation or contract approval requirements, especially if there's sensitivities around programs or content that you have on certain aircraft or platforms. And obviously sometimes there's the HSR if there's any kind of antitrust risk perspective. So it depends. The other kind of wrinkle that you have to take into consideration are foreign buyers. Increased focus in the Trump administration the first time around, and even more so now, on the CFIUS process, which is the Committee for Foreign Investment in the US. Very much a real deal killer in terms of timeline perspective, and maybe even a deal killer overall. So you need to be really cautionary about who your investors are, and they take that very serious. The CFIUS approval timeline has also slipped. What used to be 30 days is taking 60 days for very basic, and even longer. And we're seeing that overseas as well. The UK MOD and the Europeans in general have felt and have rhetoric that they are overly reliant on the Americans from a defense industrial base and supply chain perspective. They are. They've had a lot of consolidation and they rely on a lot of American production for their own defense. In times of war, America is going to be focused on the Pacific, and we're going to count on Europe to be focused on Russia. And so there's been a real focus of NATO and the European countries to stand up their own supply chain. But the MOD, for example, in the UK has been very challenged with some of these go privates, some of these large private equities like Advent coming in and selling off Cobham and Ultra in pieces to other private equity firms. They feel like it's almost a dismantling of their own industrial base. So they've actually stood up their own regulatory approval committees that have held deals up for a year plus for approval. Even if you're a US private equity firm with assets in the UK, it's just very much getting a lot of scrutiny. So the timeline depends. And if you're a proprietary one-off transaction, which many of these very good, high-quality assets have been, sometimes you can make it a little bit shorter because you're not going through the full auction process.
You mentioned, countries outside of the U.S. Like what is maybe the percentage of or just activity in the space, domestically and internationally outside our borders?
So we've seen a ton more interest internationally. A couple different factors are at play. We run into, at least on the defense side, what we call ESG or environmental social governance concerns. A lot of that are LPs that have concerns around investing in anything that touches munitions or weapon systems, et cetera. A few years ago, I sold a company that made protective armor, and private equity in Europe wouldn't even look at that, even though it was life-saving protective armor. Dramatically changed. The rhetoric has shifted in Europe, and we're seeing relaxation of ESG considerations. Same in the US to a certain extent as well. But there's a lot of, with all of the defense funding increase, both at the DoD, but also all of our European nations, it spurred a lot of interest by strategics and private equity in Europe. And so there's opportunities for the US to diversify some portfolios by buying European companies, and vice versa for European companies to come get some presence in the US via acquisitions to be better postured for defense contract awards. So you see it with the likes of the Rheinmetalls of the world, the Saabs of the world. There's a lot of different pushes and strategic intentions to have US footings to be able to be in a really good position for a DoD contract. The DoD is still the largest defense spender by a multiple of everyone else combined, many multiples. And so the US market tends to be the best market to be in. That's very American-centric of me to say that, but Europe is trying to get there. Europe has their own challenges and concerns, and I think a lot of Europe's defense industrial base is in its infancy because, as I said, it was overly reliant on the U.S. supply chain.
What about policy shifts and how they're impacting the deal activity and affecting it, good, bad, or indifferent?
Yeah, so the onshoring of manufacturing for aerospace has been a big impactor, as well as for defense. I'd say defense has been less impacted by tariffs, generally speaking, because defense tends to require American made to begin with. There's been a huge focus all the way down to the individual component level where there wasn't that much scrutiny a few years ago. So a lot more focus getting down at the individual chip level, for example, on the electronic side, to make sure that we're not having Chinese chips in certain weapon systems and platforms, which I read an article a few weeks ago that scarily there's a large percentage that was kind of getting by with before the scrutiny. But the policies have been more about driving investments in defense. And frankly, a lot of what we've been doing in South America has been interesting, from opening up federal funding for border patrol. Part of what we do in the defense practice at BGL is tactical equipment, law enforcement. That includes Homeland Security and Border Patrol. And by designating some of these cartels as terrorists, for example, it opens up federal funding and new contract opportunities and vehicles for companies that historically have never had kind of that degree of funding. So that policy shift has really impacted a lot of law enforcement and tactical companies. But broadly speaking, the world has multiple hotspots of geopolitical instability, continues to get even more unstable. And so that's driving defense spending across the board in the US and overseas, which is just driving more investment into the companies.
Mm-hmm. So overall, kind of a hot space, it sounds like. A lot of activity.
It's blowing up, pun intended.
Yeah, or pun intended, right? What's the future hold? What are we looking for? What are some key indicators of the industry and maybe some sectors that are influenced, and what does the future hold?
Yeah, I mean, so we'll talk about defense because we've been very defense heavy in this, and I'll circle back to aerospace because it certainly deserves its time to shine for a minute. On the defense side, it's really anything in the defense supply chain, the defense industrial base. We have woefully underinvested in our defense industrial base for the last 30 years. During the mid-1990s, when the Cold War ended and the wall came down, there was what we call the peace dividend. There was a huge consolidation of companies that were in the defense space, and it's put us in a precarious situation from a manufacturing perspective to be able to spool up manufacturing and be able to increase production. And you're seeing it today with all of Trump's tweets. So from a defense perspective, where I would look and where I tell my, when I advise on the buy side to look, are really follow the funding dollars from the DoDs. What are the national security? What are the funding perspectives and priorities that Hegseth has, that the DoD has? But really, what are the enduring ones that are going to last beyond this administration? So things like the energetics market, which really is the market around everything that goes boom, I guess, for a lack of sophistication to say it. So just upgrading and increasing the technology in the energetics market, modernizing it. Anything, as I mentioned, in the manufacturing side, precision manufacturing, component manufacturing, onto things like weapons and missile systems, munitions, any kind of longevity, long life programs, things like the I'm biased, it's my husband's plane, but the F-16, the F-18, the C-130, what I call large global installed base, aircraft that are going to be around for decades to come, that not only the US fly, but our allies fly as well. And so access to those programs are going to be a big hotspot for folks. Defense electronics, RF, microwave, connectors, hermetics, seals, etc. Those are all really critical in every single weapon system, munition, any kind of program that we have. So they're very much omnipresent in the defense ecosystem. There's been a real roll up there by the Amphenol's of the world, TE Connectivity, ITT, and Molex, but you can still play in that space. And TransDigm just announced a deal where they acquired a business from Arlington Capital for almost $1 billion. That was kind of in and around that defense electronics space. If you can get a deal there from a buy side perspective on a one-off basis, it's a really great space to play. And then anything in the foundational test and measurement space, for example, supporting the warfighter, supporting the industrial base, all the way down to the materials level, up through large subsystems. Those are all great places to play. Maintenance, repair, and overhaul, which is the repair of aircraft and programs and platforms, continue to be a bright spot, but from my opinion is slightly overvalued at the moment and is very overcrowded given some of the demand fundamentals and this rush by investors to go in. And that goes for defense and commercial. So that's an area that, I think is a good space, but is trading for much higher multiples than it has historically. Commercial aero, back to commercial aero, commercial aero is coming back into its own. It had a huge super boom, kind of the 2010 timeframe up until the MAX issue in 2019, the COVID challenges and black swan event, as I mentioned, and then the supply chain kind of fall apart. Now that Boeing has gotten the blessing from FAA to increase their production, we're seeing Airbus kind of right their ship and some of their production challenges that they have. It's really opened opportunities for the tier 3, tier 4, the smaller mom and pop suppliers, or smaller private equity owned assets to really come into their own. A lot of those founders are pretty fatigued from a couple years of challenging working capital, record backlogs, a lot of uncertainty. And so lots of opportunities to roll up businesses that are sub 20 of EBITDA to create real platforms of scale. Casting and forging houses, which are fantastic businesses during times of high rate production for aircraft OEMs, are coming back into their own because we're coming back into record production now that the backlogs are starting to move and production is starting to increase and go back to where it should be. We're still not where we are kind of pre-COVID, but the demand drivers are there. One of the big demand drivers from a macro perspective on commercial is just passenger travel. The number of passengers that are traveling are record every single year. Boomers are retiring, they're going on vacation. And so we're seeing a huge demand, which is, again, kind of stressing out the airlines as they try and put in new orders for new aircraft, which is just helping the whole supply chain from a demand perspective.
Let's talk to our business owner audience here real quick. What are some strategic considerations for these business owners who might be looking to exit their companies in the next 1 to 2 years? What should they know?
Yeah. So, quality of earnings, which is really a review of your financials by an accounting firm, used to be nice to have in processes. They're quickly becoming must-have in processes. Your buyers will be doing them. And so it's better for you to do a quality of earnings upfront so you can kind of find out any skeletons in the closet that you weren't aware of, or just frankly look at your business trends in a way that you maybe have never looked at it historically. I'd say that processes for good assets, maybe not A+, but not terrible assets, have been pretty bogged down in diligence. And so being able to prepare upfront, taking that extra 6 months to do it, make sure that you have real clarity into your pipeline, into your sales forecast, doing that quality of earnings, maybe even doing an industry study to validate your market position are hugely beneficial on the back end of a process. There's a really dorky line, failing to prepare is preparing to fail, right? No, truly, you can never be too prepared for a sale process, because once you hit go and you call buyers, time is never on your side. You don't want the clock running against you, because now you're up against forecast numbers that you could risk missing, et cetera. Preparations is a really big one. And then being able to have contract visibility. Timing of when you go to market depends so much on, what does your backlog look like? Are you a purchase order based business, or do you have long-term agreements in place? What are the expirations on those agreements? And are there additional years that you can add on to it, or are you going to be recompeting them? You certainly don't want to be entering a sale process in a year when your majority contract or one of your big contracts is up for recompete. A lot of folks in the defense space struggle with funding certainty around, especially as we have things with, Congress getting hung up on the budget, or we're just having a continuing resolution running, which basically says we're going to spend what we spent last year. A lot of that kills innovation. It kills a lot of the tech guys. And so to be able to understand the dynamics of where am I in the technology adoption? Who is adopting it from a technology perspective? And what are my opportunities to go forward to get an actual contract with longevity? That will definitely dictate a business owner's timeline as well.
Like I said, talking about the future, what the future holds, what are, any thoughts as to, final takeaways, for our audience? What are the top 3 things you think our audience needs to know about, this space and what the next year or 2 looks like, and so they can, feel comfortable with some great intel from one of an amazing expert in this space?
I think both sectors are entering their early innings of a boom, as I mentioned. So whether you're in aerospace or defense or both, it behooves you to really consider, where do you want to go with your business? How do you want to be strategic with it? Do you want to do acquisitions, or do you want to potentially sell? There's a lot more flexibility. Minority equity is available in much larger quantity for a lot of these business owners. So a lot of times folks can take some chips off the table, monetize what they've built, but continue to lead the business in a majority. So I'd say that's a real big consideration for folks. And then just where valuations are playing out. Every subsector across the board is trading at 2 to 3 turns of EBITDA higher. These businesses trade as a multiple of EBITDA, and we are seeing a huge uplift in valuations because of these demand fundamentals that I talked about and the increased investors across the board. And frankly, I think it's going to be like this for the next 5+ years. Certainly where defense is geopolitically, the world's not getting any safer, and Taiwan's going to be the next real hotspot challenge. And so we continue to see and continue to believe that defense is an area that, if you're in that sector, you should start to think about what an exit looks like. And if you don't exit this year, that's fine. You're not missing the window, because again, I think it's in the early innings. Same with commercial aero. I think there's also lots of opportunities to buy for value. There were folks that bought businesses in COVID or pre-COVID that have underperformed, or they had overpaid for these businesses that are now looking to exit. So there's a lot of value buy opportunities as well that are good fundamental businesses that just have had challenges through supply chain, but are coming back around.
That's great insights and great to know. Wow, what an amazing amount of information. I really dialed into this space. You're truly an expert, like I said before, and very impressed with all the insights that you have. Where can our listeners find you? if they have questions or find more information about the great work that you're doing or just more about the industry.
Yeah, so we do industry teach-ins. We talk about subsectors, and I'm always available to have calls with founders or private equity or strategics and have ongoing dialogues on a daily basis. Our BGL website's a great place to start. So Brown Gibbons Lang in Cleveland and Chicago, New York, or my LinkedIn. I'm very active on LinkedIn and I do a number of speaking engagements. I'm also at a number of trade shows. I go to the Air Show every year between Paris and London and often speak at those shows. So I welcome, a reach out. Happy to meet up.
Thank you so much for joining the show here today. Like I said, a lot of great information about the aerospace and defense sectors, and something we haven't talked about in the past, but like I said, a wealth of information that was shared here today. So hopefully you guys all learned a couple of things from our conversation here today. And if you do have any, needs or desire to learn more about this space, definitely check out Meghan and all the great, information they have on their website. Be sure to like, share, and comment on this episode. Pass it on to anybody you think might benefit here from our conversation. And make sure to subscribe to all the places that this is housed, our YouTube channel, all the streaming platforms for podcasts. Make sure to stay in the know, subscribe, and get that notification on when a new episode airs. And make sure to reach out to Meghan and her team and check her out on LinkedIn and all that on her website and learn more about the space. But yeah, take care, everybody. And until next time. Thank you for joining us on this episode of the M&A Mastermind Podcast, and a special thank you to our presenting sponsor, Cornerstone International Alliance. If you enjoyed today's discussion, don't forget to like, share, and comment. We'd love to hear your thoughts. Make sure you hit that subscribe button so you never miss an episode. We'll be back next week with more insights, strategies, and real-life experiences to help you take your M&A game to the next level.